Hello. Good morning. How you doing? It's 7 a.m. Doesn't feel like I got any sleep last night. We're gonna do our best today. Plain and simple. Plain and simple. We did a lot of work Saturday. Just relearning everything, making sure everything was nice and understood. Looks like we seriously regretted our decision Friday. No, not Friday. Thursday. Taking that trade and exiting up here when price barreled on back down to this level here. We probably could have held on to it till right now. We probably could have. Um, However, that probably would not have been the smartest decision, though we are in a downtrend. Not smart holding it overnight. Just not. Very bad idea. From there, let's go this way. All day today, 3 folders of euro. The French, German, Italian banks all have holidays. The GBP, Great British Pound, bank holiday. All 4 of them are not going to be open. However, we are none of them. We are USD. This is Tuesday. This is today. Market's open. Let's see what we can do. One, two. That's our lowest point. That's our highest point. Lowest point right now, currently. This is our highest point. London session past Asian session's low point, so we don't care about that. We have our price range on the S&P. Boom. We have our highest point here. Same story on the NASDAQ. Don't care about this low. We have ourselves a gap here, which is going to make things somewhat difficult. Somewhat. Because this is hard to see. I'm going to do this. I can see those now. Yeah. I can see these three much better. So I'm not going to change these. This is purely so I could see them. What did I say? Let's remember what we did Saturday. I'm not going to use the building blocks on the weekly, the daily, or the hour to determine where price is going to go for the day. What I'm going to do is use daily, primarily, solely, for the direction of trend. Do these charts look the same? Yeah, actually they do. Largely down, really strong candle up, a little bit further down. General trend is down. I can see that. General trend is down. What are we waiting for exactly? We're waiting for one of our key levels to get hit after this open. And after this open. One of those is going to get hit, and when they do, that's when we'll spring into action. And only then will we spring into action. Just so we're on the same page. For as high as this moves, this will move. Once this candle right here starts, we don't care. Like, these two are not going to move again. And we're only going to count these three for key levels. Plain and simple. I see a couple fair value gaps through here. Signs of continuation. Nothing major. I see this fair value gap here. That's going to get closed up above. This is on the 30-minute. This is me looking at it thinking, okay, there is potential for this to be reversed. However, my tried and true defining factor is when price is going to come back down, hit that key level. That'll be the reversal. We're looking for an uptrend afterwards. General direction is down. Well, by default, say by default, right now there is a small difference between the two charts. On the S&P, this has already come down and hit this, whereas NASDAQ says no, it has not. Small difference. Yeah, very small difference. Because we're wanting to get the best trade possible, and I don't want this video being hours and hours long. I'm gonna pause now. I'm gonna pause this video, continue moving this until this candle right here starts. Once this candle begins to open slash close, we'll go down to the 30-minute on both. And we're going to watch with great intent where this goes, move it to where it needs to. Once this final candle right here closes, we're not going to move the line anymore. It's going to stay right where it is. General direction for the day is down. For the rest of the market, we'll be right back. Sorry. That was stupid. The only reason I'm putting this here is because of the fair value gap. I noticed this right here moved past our previous setup for the outside low, lower than current, right? The only reason I have this line here on both charts is to mark a fair value gap that hasn't been disrespected yet. As a result, we're looking for price to continue down in the same direction. However, we're not looking for it to cross this line. If it crosses this line, I'm expecting a strong reaction to the upside. That's what I'm thinking is going to happen. We'll know when it crosses that line. We'll see it. Plain as day. As for this here, and did I do it on this one? I didn't. Not yet. Anyway. For my past self on Friday's video, I'm marking all my key levels. So we have a bit of a small difference in the charts. We can see that here, I think. Yeah. So on the NASDAQ, or not the NASDAQ. No, we can start with the NASDAQ, because why not? On the NASDAQ, we have our fair value gap here. And the very next dip down, there's nothing. Like, that's so small, I can't mark that. And then it's the reverse here. Almost nothing to mark there. Large fair value gap there. They're telling the future of each other. And it's extremely laggy, because both are saying continuation down. We got that from both. Most recent confluence, though, is this right here. This one right here specifically, because this is the sign of continuation. That's still saying down, so that works. Any other key levels I could derive from this? This might be an order block here. Considering this did clip through two lows off the higher time frame over there. I think. I don't know. It's currently 7:42. We got a little ways to wait. I think I'm going to be right back. Again, I'm going to do some chart work on Trade Locker, see what I can do with it. From there, yeah, I'll pause the video and we'll continue when our key levels are hit. BRB. Okay, so I'm looking at a few things. First off, We're forming this candle now. Price hasn't gone lower, nor has it gone higher. We're currently forming this one. We're not going to move these, assuming this doesn't go past or past. These two will stay the same. Back up to the hour, because that is our confluence level. Same just over here. Forming, neither have passed. We'll wait patiently. Plan something. We're waiting for a key level to get hit on the hour. If it's not hit before 10:30, we're not taking a trade. If it's hit, which is what we're hoping for, which is what should happen, right? That's where we're going to take a trade, more than likely. With that being said, I'm looking at this chart right here, which is 10 minutes ahead of TradingView's chart, and it's looking like we are going to get that key level hit again. And that's all we're doing at the moment. We're just waiting, patient. From here, I'm going to pause the video now. I'm going to let it do its thing right up until it hits key level. And then from there, we will begin building our blocks to take a trade. Be right back. Okay, so it's 8. Taking my notes from before, not using this app I'm looking at right now to determine where price is going to go on TradingView, using it as a separate thing altogether, right? Price has not moved from, not that, this right here. This range has not moved from the top of this to the bottom of this. Hasn't. Okay, I was wrong. Maybe it moved a little bit. Boom. Oh, I see. That's okay. Okay. Boom, boom. Cool. Fair value gap is valid. Sign of continuation is going to continue on down. Separately. Get away from the app, because away from the app is better. We're going to be looking for price to do its own thing separately. One thing says it's going to go up. Directly in front of us says it's going to go down. I'm going to wait and see. Patiently. I'm going to wait and see. Yeah, I'm going to pause. Okay. So I'm watching videos and doing stuff at the same time, looking at current price action on the app, right? We did hit our bottom key level here. From there, we move down to the 5. Simple. We need to look for break of structure and inverse value gap. Because we are in a downtrend at the moment, I am looking specifically for the most recent high in a downtrend to get closed above. Or I'm looking for a fair value gap to get inversed. It's got to be a candle closure above the most recent high for it to be a break of structure. For an inverse fair value gap, it's got to be a candle closure above the wick starting the fair value gap. We'll be back when I identify it successfully. Oh, sorry, having me some Easter candy. I'm on my. But we broke past our key level, London low here. I readjusted some times to better suit what I'm running with. We have a more accurate depiction of Asian Open, London Open, and New York Open, as well as New York Close. So that way, in the end, we are pretty much good to go. From that, we have our key level hit here. We actually had 2 on the same candle hit. This one and this one. From here, we go down to 5-minute. We're looking for a break of structure, which means a closure above this high. We didn't get it. And it respected this fair value gap. It's continuing lower. So we're either looking for an inverse fair value gap or a break of structure. I'm looking at both Trade Locker and Trading View. Trading View is 10 minutes delayed. So 2 candles. 1, 2, right? Because it's currently 9:50. Boom, boom. We're there. We're looking at it right now. Looking at Trading View, there is no fair value gap to invert. Yeah, there is none. That one was inverted there. This fair value gap here was inverted on this candle. But we still have a valid fair value gap up here. We actually have 2 that are both being respected. So right now we are waiting on a break of structure, which would mean we would need a candle closure above this high here. Once it closes above it, we have our break of structure. We know the downtrend is coming to an end. Ooh, hello. Did not mean to do that. Whew. Because of that break of structure, we're looking for a, well, we already have a reversal sign. We have liquidity sweep here, swept this low. And as a result, we're waiting for it to go up. That's our goal. We're waiting for an inverse fair value gap from this down leg to get inverted or a break of structure. So we have a low here. We're waiting for a high to form, come back down, break past, right? In a downtrend, we're looking at the highs to get pushed past. So we need the leg up first to create a high, and then a leg down, not surpassing the most previous low, and then the next high to surpass that high from there. It'll continue up. To confirm that break of structure, we would need to wait for our 5-minute continuation confluence, either fair value gap, break of block, or an order block. Yeah. It's got to be a closure as well. We'll be back when we find it. Alrighty. Looks like we finally got our break of structure after waiting all the way down here. This is on the 5-minute. Looking at 1, 2 candles ahead, I see a red candle here, a green candle here, and the high is currently above this high, this candle high, and this candle high. Right. All three of these are roughly in line. This fourth candle is currently above this here. This is confirmation. Currently, we have 2 minutes and 43 seconds for that candle to close. We're going to wait patiently for it to close. Is what we're going to do. I'll wait patiently. I do want to note that it's currently 10:37 a.m. I think we made a mistake up here. We should have considered this to be our key level that was supposed to get hit. I don't know. I don't know. I've been waiting this time for a inverse fair value gap or a break of structure for this 5-minute here. That's what I've been waiting on. Was my mistake here, because per this we were in an uptrend, right? This would have, I'm guessing this would have been our break of structure here. And then from that, continuation fair value gap. And then we'd be going to the 1 minute confirmation for the break of structure or an inverse fair value gap. Going downtrend, we would have waited for this high to get closed above here. Or for an inverse fair value gap. We're still in a downtrend. We'd still be waiting on... Okay. Let's try and reverse this mistake, shall we? Because it was per this, right? We had break of structure, not here, but right here, when it closed below this low here on the 5 minute. And from that, we would have waited for fair value gap. No. Yeah, fair value gap to form, which would have been this right here. And then on the 1 minute, we would have needed to wait for a break of structure. A high to get closed above, because we are in a downtrend. From here all the way down. Downtrend. I think we're still waiting on the closure above it to enter on a sell position. Or would we enter on a buy position? Because we pushed past this low here. Which means we ought to be targeting other lows elsewhere. We pushed very far past this low. I don't know. I don't think we pushed far past it at all. It's 2 candles, 2 hours worth of price action. Down. Do we think price is going to continue further down? Because we hit that low here. The next low is all the way down here. Do we want to try and go for that? Or would we rather go up higher and potentially hit this high here, or this high here? The trend says down. Fair value gap here, fair value gap there. No invert, no invert. Oh, none. Fair value gap there. Respected. Broke above. Looking for a break of structure. That's a closure above a high. This would be the highest point closest to current price action. Go here. There's a high, not closed above. This actually, I think we got closure up above this. So press sell. The phone locks up and it times out the thing. Come on, queue up. On the 1 minute, we actually got our inverse fair value gap on this leg up here. We know price is going to move up. We know it's going to move up above this high here. We know it is from this to this. Now the question becomes, how much lower will it go? If it continues to here, that works. Can you hear me? That works for us. There are no lower lows. So way over here. And the next lowest low is like right there. That is a steep jump from where we are at the moment. That is incredibly steep. We know it's going to go up first. What I don't understand is why is this being placed here when I placed it on a candle down low? No, I placed it up high. This is accurate because it goes up and then I caught it halfway down. We're entered in on a sell position. We're not going to change that opinion or our anything. We're not going to change our position until we either get stopped out or we make a profit. And I'm only ever going to have the one take profit, so. I had a scratch off. Take a look at my dinosaur. I also had some snacks. Hot dog, pizza, hamburger. I'm sorry, cheeseburger, because it's got some cheese on it. Got a taco and some fries. Sounds like a great Sunday snack. Look how smart I am. I completed a maze with one line. Crazy, I know. It was fun. To leave a mess behind. No, no, no. So, under the confluences we actually got, right? Because we thought this is under the pretense that we made a mistake early on in this video, right? We labeled all of our key values, key levels, right? We made sure that they were pretty much set to go. And we wanted to see one of the key levels get hit. That was a higher low on the London and Asian session, right? One got hit. One did get, in fact, hit. And it wasn't until way later that we got the confluences we did to enter. So let's back it up all the way up the food chain, all the way to the hour. We were here, right? We didn't see our price get hit until this candle here. From this, we went to the 5-minute, and from this candle forward is what we were looking at, because this is where our price was hit. Actually, I'm sorry. I'm going to correct myself. This candle is where our price was hit, right? This wick down, right here, is what hit our key level. From here, we waited. We needed a break of structure. In an uptrend, we need to be looking at the bottoms. In a downtrend, we'd be looking at the highs. Because we are in a downtrend, I was looking at the highs the whole time. It needed to be a closure above the high in order for us to know, hey, yes, it is in fact going to continue down. Well, we got a closure below the low. And it was from this mini trend up that we thought, okay, maybe we made a mistake. Maybe because of this valid fair value gap that's here still, right? We have our leg up that is a mini retrace, a mini uptrend, if you will, right? Because this was an uptrend up until this point here, where we made a lower high and a lower low, within this opening to this here, right? From this, we needed to wait for a break of structure or an inverse fair value gap. We didn't count this right here as a break of structure because we were, again, looking at this as a downtrend. We were looking for the highs to get passed up above, right? And as a result, we missed this opportunity here to identify this as a break of structure. From this, we should have been well aware that from this point onward, we should have been identifying more building blocks. What kind of building blocks? The fair value gap for the second continuation. Confluence, right? Because this confirmed price was going to go down per the fair value gap being respected. From that point, we could have been looking for, on the 1 minute, which is what we did just now, for a break of structure or an inverse fair value gap. From there, we enter. On the inverse fair value gap, thinking price is going to go lower. Because we are in a downtrend. Price is going down. And it respected the fair value gap up here, showing that price was, in fact, going to continue down. We did not get the break of structure. Or, I'm sorry, we got the fair value gap. If we go down to the 1 minute, we go down to the 1 minute, boom, right? Here's our leg down. We did not get a break of structure until way over here. We didn't get the inverse fair value gap either. Whew, big stretch that time. So, wow. That opened everything up. Very good stretch. But from that fair value gap on down, we didn't get an up candle until right in here. From this, again, we're in a downtrend, right? We needed a break of structure, so I'm looking for the highs. It is impossible to tell what those two are. I can't tell what these two candles are at all. But I can say, what I can do, is assume that this is any kind of pattern. The highest point is here, the lowest point is here. I'm looking for it to get closed above up here. Because we're in a downtrend and we need a break of structure to the upside. Boom. That is our key point. Didn't get closed above. Still hasn't gotten closed above. So, ignoring this, moving on to the next high. Down, up, nope. Up, down, highest point. Boom. Did we get closed above? No. No, we didn't. Next high. Up, down. Boom. This here. Did we get closed above? Nope. Next point. Way down here. Because right now we're still in downtrend, right? Lower high, lower low, lower high. Granted, this high was above this. Didn't close above it. Lower high. We had way further low, lower high. Do we get closed above? Not until this one right here. Not until this right here. And we didn't even see that. We waited for the inverse fair value gap. We waited for it to come back down to confirm that, yes, this was an inverse fair value gap off of this here. Had a fair value gap here because we also had the break of structure. We did not have a break of structure. Sorry. We entered off fair value gap. We entered on the move back down because we wanted to get the most of it. But continuing with what I'm saying here, right? We didn't get a break of structure until this candle. More accurately, more closely, because it looks like we actually had a break of structure beforehand. So we had up, down, boom, high, Didn't get close above till that candle. Up, down, boom, high, boom. Yay! We got a closure above a high. This would have been our break of structure candle, right? We could have entered off of this, but I wasn't satisfied with this. I'm first time looking at that, first time identifying it. Satisfied, I can't say I was satisfied or dissatisfied looking at that. I can say that without question, I didn't see that. I didn't think to look because, again, remember, we were thinking off of the key level, not the fair value gap. Not this, but this. We were thinking off of this to look for ups, right? Not downs. We failed to consider this a key level. I failed to consider this a key level. And as a result, we missed out on a huge leg down. It cost us a little bit, but we caught ourselves. I think I successfully caught myself. We stopped thinking about that key level just in time to look at that fair value gap being respected, price continuing lower, because fair value gaps are a sign of continuation. Price continuing lower and finding the inverse fair value gap that we needed. From there, we entered a sell position. From that, we're looking at a leg down. We're looking for it to continue on down. That's what we're looking for. We had a break of structure, mini break of structure, saying that price was in fact going to reverse, like this downtrend is coming to an end, and that might actually very well be the case here. The trend might be coming to an end. But sure enough, I'm looking at a fair value gap now, past this leg here. I'm looking at a fair value gap right here. Because again, this right here, this whole leg up, invalidated this fair value gap, saying price was going to go higher. It did, and went all the way up to here. Fair value gap, right here. This is where price is dancing now. It's actually gone lower than this. It's actually dancing like somewhere down here now, which is good for us, which is good. I think we caught ourselves just in time. Just in time to catch this little bit of liquidity that's going to be out here in a minute, right? And what I think is going to be the best option for us at the moment, so we're not being entirely too greedy. Right here. What I want to do is I want to catch these lows. So this is the next low that it's targeting. This right here. That's the next low it's targeting. After that, it's that one there. So that's what we're waiting on currently. These are the only two lows that price could be continuing towards. I think we actually just hit this one on the trade locker. So, with that being the case, we're going to wait patiently. We are going to wait for this key level to get hit. Once it does, and we know it's been hit, from there, we're looking at one reversal signs. My exit strategy. What is my exit strategy? I said I'd be looking up videos the entire time throughout the weekend. I didn't. I actually went to GTP. I don't know the acronym. The AI software, right? I actually went to that and was looking up different methods because I found a video that expressly had the information I was looking for on trading strategies, right? And I kept saying strategy. I kept thinking strategy. Okay, my entrance method works. But I skimmed over the word method, thinking nothing of it. I thought it was just a strategy. Ironclad, it might not work every time, but it is a thing. A better word for a strategy that has no basis is the word called method. There are different methods to entering the market, just like there are different methods to exiting the market. As a result, it got me thinking. If this is a method that can be improved upon, that must mean there's a method to exiting the market as well. So, I thought, let's go here, ChatGPT, whatever the acronym is. Let's actually ask it, because it'll give me a rough rundown of the many different methods that people use to exit the market. And from there, I can pretty much draw up my strategy, my method, my own version of trading to get into and out of the market. I like the entrance method I'm using. I like it. It makes sense to me. I've been studying it for a while. I understand it. I understand how to use it, and I'm still working on bettering my use with it, right? That is currently what I'm working on. Now for a method I am unfamiliar with, that is the exiting method. So, using the logic, and this is me making it up as I go. Using the logic, history repeats itself, right? The market is going to go up eventually. We don't know when, aside from by determining what it's given us in the past. So, presenting ourselves with the data we have here, right? We're looking specifically for signs of reversal. What are signs of reversal? Breaks of structure. What are signs of reversal? Inverse fair value gaps. What are signs of reversal? Liquidity sweeps. We're looking at this right here. This whole thing says reversal to me. This one from 1017 to 1050. Sign of reversal. What is my exit trigger? What is my no-fly zone? What is my potential leave strategy? Well, just like with entering the market, we're looking for our building blocks. Again, I figured use the same thing in reverse order. First, we identify our key level. Our key level, what we're looking for is a break of structure. First, actually, let me restart that. We're not looking for a key level because we've already hit a key level. Our key level is take profit, or as close to it as possible, because we know price is going to go up eventually. So, skip the key level, aside from take profits. Break of structure, inverse fair value gap. Do I have a break of structure? Yes, right there. Do we have an inverse fair value gap? Yes, right here. Do we have a break of structure again? Do we have another inverse fair value gap? Not yet. What's an inverse fair value gap for a liquidity sweep on a downtrend? The passing of a high. See what I did there? From that, we can pretty much determine that price is going to go higher. Now, the same thing is the truth for the opposite. What if I want to continue in the direction we're moving? What if this is where we're going? We're looking for price to go lower than the level we thought previously was a liquidity sweep. Make sense? We're looking for price to go even further down from that inverse fair value gap that confirmed the break of structure. We're looking for price to go even lower than the break of structure, so much lower that the most recent high outside of the inverse fair value gap is passed and closed below, because ultimately it's going to give us a fair value gap, and from that continuation below that price action, we know price is going to continue lower. I think my method is okay now. Right now, I think it's okay. That makes the most sense to me. It is, without question, a mirrored method, because you know price is going to go up or down. The question is, where do you stop and take what you've earned? From that, I'm using the method again. I'm using the exact same strategy, except it's not just an entrance strategy now, it is the exit strategy. I'm looking for signs of continuation, fair value gaps, breaker blocks, order blocks. I'm looking for price to go into equilibrium. I'm looking for it to come back up, right? I'm looking for it to attempt a level, pass it, and continue down. Pass it and continue up, or respect it and continue down. That is a fair value gap that's being respected. That is an inverse fair value gap if it's disrespected. That is what I'm looking for. That's what I'm looking at. That is my trigger to exiting the market. Before price has a chance to go so far in the other direction, I lose on my gains. I think that makes the most sense to me. That honestly, at the moment, makes the most sense to me. I'm looking, and I think it's working. Just a little bit. Had to make sure it didn't close on y'all. It's kind of working. Kinda. I am intently looking at all of it. I'm looking at everything regarding this. We have another fair value gap saying price is going to go down. Was it a disrespected fair value gap? No, it was not. Price is going lower. How much lower? Don't know. 5186, 5157. So right now I'm guessing. Oh wow, that's 57. That really went that far down. 57's in that right there. 57's like that dotted line. I don't think it went that low. Yeah, I don't think it went that low. Thought it did, but it didn't. That would have been interesting had it actually shot down that low. Hello. We have an inverse for value gap on the 1 minute. I think. We have 7 seconds for it to close. I think it's just going to respect it. 3, 2, 1, close. Close below. Valid fair value gap. Price is continuing down. We're going to try this again Tuesday, and hopefully it works the same. Hopefully we don't make the same mistake as last time, too, because that actually sucked. I didn't want, like... I married the same thing I did last time, where I thought we needed a liquidity sweep for it to continue down, when in actuality it could have easily just been a fair value gap being respected, and from that, continuation down, right? I think that's a valid way of looking at that. Makes the most sense to me. What's this profit to loss ratio that I've got going? Because that is a large jump. I am on a short position. So this is here. Put that there. And this one is here. Put that there. That is a 2.54. 1 to 2.54. Risk to reward. Am I happy with that? Yes. I am, in fact, happy with that. I'm looking forward to making a profit off of this. I am. I am semi. Anyway, I can't quote that. But you get the point. You get the point. We're looking at that right there. That is a respected fair value gap still. I'm not seeing your break of structure. That looks to me like an order block. Sign continuation price is going lower. It is currently 11:09, and we took this trade after 10:30. I was after a mistake made previously. I understand not to take a trade after 10:30 my time. I did it anyway. Actually, did we? Let's see. Took it here. 10:43, 13 minutes after we were supposed to be gone off this market. If a correction off of a mistake is what could give me a profit, I'm not going to complain. And I know my method for exiting. I know it. Because it's the same for entering. Hello. Hello, fair value gap. Oh, nope, never mind. Never mind. Not a fair value gap. That's good. We are a full 10 candles behind where we are on TradingView for the trade locker, just an FYI. I believe we are about to hit our first take profit as well, or we have hit it, sorry. We have hit our first take profit. I'm looking at price continuing lower. We did not break structure. Not yet. Okay, so I'm looking at a breakup structure now. Right there. Yeah, green candle, red candle, green candle. That green candle closed above the high of that previous green candle there. However, how do you identify high? Up, down, highest point is there. We're looking for a closure above that. And again, we're looking for most recent high up, down here. We're looking for a closure above that. I don't think we broke structure. I think I'm overreacting. That makes the most sense at the moment because I'm looking at this and I'm going, yep, that's clearly breaking structure, but no. I have to remember, it's a closure above a high. A high is the wick, not the closure of a previous candle. Ergo, we have not seen a break of structure yet. We're still on the decline. From there, we wait. I caught myself. See that? Comment section. Did you see it? Hope you didn't miss it. I caught myself. Again. The only reason I dragged this up, simply to watch. Watch and learn from my past. Right now, I say it looks pretty dang good. I'm gonna turn my music back on now, but I'm also going to like chill and watch. I'm gonna watch this and chill at the same time. Okay? Okay. I already do. Go away. so I can hear myself and you at the same time, right? I'm currently looking at an inverse fair value gap, right? That's also a break of structure. We got both a break of structure and inverse fair value gap on the same candle, right? The exact same one. Now I'm looking for my continuation confluence. I'm looking for a fair value gap to form off of that inverse. In other words, the reaction back down has got to form a fair value gap for it to continue on down. If it doesn't form, we do not get a fair value gap. It's going back up, and so I'm leaving the market. If the fair value gap forms, which it's looking like it is, price is continuing down, we have continuation confluence, and it's going to keep going. We have 30 seconds for this one to close. That is what we're waiting on. Did that? Please tell me. Yep, you can see trading view same way as I can. Good. And I will let it play out so you can see exactly what is happening and where. Like, I will leave when Trade Locker tells me to, because this is current time, current price action. Trading view is behind 10 minutes. So that's what we're going to do. We're going to wait 10 minutes after I leave this. And yeah, that's going to be a thing. Because you guys can see it on TradingView, I'm going to let TradingView and the video continue rolling. We do have two fair value gaps formed. We have an inverse fair value gap back to the downside, and we got a continuation confluence through a second break of structure. The low was closed below, so it's going to continue on down. So we're going to wait patiently for that to occur. From that onward, that is an inverse fair value gap. As a result, we got a fair value gap off of that. Continuation on down. I'm going to play my music now. Put the mind at ease. I'm listening to this, by the way. I just set up my take profits on Trade Locker, so current price action isn't fooling me. I have all of what I need where I need it. Okay, so on a key level on the 30-minute from a little while ago, we are currently targeting 1. I just got through marking this one right here, this key level. We're currently inbound for this one, and we're waiting on this one specifically. Current price action almost says the same thing. Almost. Gotta remember, this is 10 candles behind what I'm looking at right now. So, price action for me looks good right now. I have to remember that. That is a me thing I have to keep remembering. This does not match current price action. Music. Come back to me. Music. Hang on. So I'm listening to them, it'll be from their channel. And it'll be the old stuff. Not this new stuff. My opinion. Old stuff is better. 2012 hit different. Just a little bit. Yeah. So my mic's not picking up anything. I'm gonna mute it because I have the volume up pretty high in this. I'm pretty sure you can tell through the difference in my tone. High volume. I'm gonna mute up. Okay, so we closed. Oh, no. We closed just above take profit. 2. Why did I close there? You can't see it like I can. Let me just show you. We broke structure. We didn't break structure once. We didn't break structure twice. We broke structure 3 times. Y'all see that? How do you identify a break of structure? A closure in a downtrend, a closure above a high. Identify the high between these two. It's the red candle. We closed above it off the first one. Right after it. How do you identify a high off of these two? Red candle. We closed it on the second candle. Identify a high between these two. Green, red, high, second candle closure. Does that make sense? The break of structure is my first confluence. The second one is the fair value gap that we got off the first candle as well. We had a first fair value gap between the red and the second green candle there, right? The third thing that broke it for me, the final break of structure. Round 3, done. We ended today with a take profit. This take profit was set to 2,900. We ended on TradingView, I believe, with 2,500. Let's review the trade, shall we? Let's, history, closing time. I believe this is where we were at. Yeah. We entered on a sell position at 5205.75. We ended on a 51597. Is this the correct date? Yes, it is. 1201 canceled, because I canceled the take profit first. And then I closed the position completely. From here to here is where our actions were. The margin was down, but we made a profit. How much of a profit? Let's just get a calculator out because I can't remember. I can't do math at the moment. Let me see. We entered at 13,014.38. We ended on 12,899.38. The number is weird. That number is very weird. Very, very weird. I didn't cancel. I closed the position. I didn't cancel it. We went up. We went up a decent amount, from 9,000 almost to 7,000. We went up a decent amount. We made profit. We were not completely in the green. We still have another $7,000 of red to get through. But per the strategy we implemented today, we came out on top of this trade. I'm satisfied for today with this trade. I am very satisfied, and we'll let it play out too, so that way you see exactly what I saw here on the break of structure. We had this high here get closed above about about 6 candles, about right there, right? We had one closure above a high, second closure above this high off of one candle, and then the third candle as a result of there being a fair value gap between 1, 2, and 3, right? We had a closure above this one. 3 strikes, you're out, done. Not even going to try and put a confluence elsewhere to that. We made a decent trade today. I am thoroughly happy with today's trade. Thank you guys so much for watching. I'll catch you guys in the next one. Actually, right now, if you haven't pressed like on the video, there's a thumbs up button below. Hit it. Tells me you enjoyed the content. Tells me you enjoyed everything about this video. If not, at least one thing about this video. Tells me I need to make more. Tells me I need to continue with this. Tells me I'm heading in the right direction. There were comments on the previous video saying, oh, that's your problem, is day trading. When you put some money in somewhere, wait 10 years. I ain't got 10 years to wait, and I ain't gonna wait. I am highly impatient. Extremely impatient. I hate waiting. I hate it. Don't ever tell me to wait. Waiting is the last thing I'm going to do. Go to Orbs Vault, because we're about to stream in 2 hours, 2 p.m. stream time, right? We got Warframe today. We're going to be streaming for 4 hours. I'm going to be hunting relics the first. I'm going to be playing with some new peeps the second. The third, we're going to have a little intermission between the second and the third, just so we're on the same page. On the third, we might hit up some quests I haven't played in years, just to play the quests and have some fun. I want to have fun in Warframe. I want to. And it's getting harder and harder for me to figure out what fun is in that game, because I have played through almost everything. I'm hunting down relics to primes that I don't have anything for. I'm hunting down ducats for Barrow, because he's got an irregular schedule this month, and he is literally every single weekend in the month of April. I think this will be the last weekend he shows up with something extraordinarily interesting, and then it's on to TennoCon from that. Yeah, I'm taking suggestions. So go pop over to the Twitch link in the description. You can find it, or in the description of the link you can find from the Twitch channel. Both lead to the same stream. The exact same thing, the exact same place, the exact same time. Comment in the live chat. Come chat. Come hang out. Come have some fun. I want to have some fun that stream. And I am going to. One way or another. I'm there to have fun. So, with that being the case, again, go check that out. Hit the subscribe button if you want to get notified about this kind of content. If you don't hit subscribe. We're going to let this play out. I'm going to mute up. Yeah. With that being the case, we'll be right back. Boom. As you can see, we have our exit position here. We had break of structure, closed above the high. On trade locker, this candle closed above this high again. And then we also have the fair value up here and a closure above this high here. Resulting in what we're seeing now, large trend up. And this is a retrace, no question about it. This is without a doubt a retrace. On an uptrend, what are we looking for? Break of structure, a low to get closed below under. We got that here. I was not comfortable with losing any of this, any of this. From where did we enter? We entered all the way up there. From that on down, this was a huge win for me. I didn't feel like losing it. I didn't feel like potentially risking it. This was a solid call on my part, in my opinion. Yeah. We entered far below where the key level was. That was my mistake. We corrected ourselves and still managed to come out with a profit. We're gold. Thanks for watching. See you in the next one.